people-driven change,
civic engagement.
social accountability.
Welcome to Stawi Podcast. Hello, viewers, and welcome to Ustawi. My name is Leocadia Gaudensia, and I'll be your host for today. I have a guest in studio. His name is Michael Obaga. He's an investment and financial expert, and we'll discuss about investments generally. So, Michael, karibu.
Thank you, Leocadia.
Tell us more about yourself.
Oh, thank you. My name is Michael Obaga. I'm a financial specialist and I come on board with a career arc of about 10 years in investment and financial advisory in the local markets generally. So I usually advise individuals and corporates on how they can be able to do investments both in the public markets and also in the private markets.
Oh.
And we also give advisory on issue to do with taxation. We look into matters, how we can advise a client to take advantage of, benchmarks such as inflation and all that. Yes.
Okay, thank you for the introduction.
Yes.
For those who know me, lately I've been making very wise financial decisions, strict on budgets and all that. So courtesy of Michael. So he is a resource. So
Thank you.
the first topic we are discussing today is on the general state of the economy. What is our debt status as a country?
I'm not going to I'll give you an overview on where we are as a country. Now, before I give that, it's good we appreciate that every economy ebbs and flows through periods of expansion followed by a period of contraction. Even as an individual, there is a time when you have a good spending. You're in a status where you're spending more, and there is now a status where now you're paying whatever you've been spending, especially when you borrow. So when an economy tends to do well, there's some form of laxity. It's in human nature that whenever you're doing well, you feel like now you've made it and you get into a comfort zone. And that's what economies get into. So when they get into a comfort zone, they tend to borrow, and they tend to borrow more than their income. You know, the rule of the thumb is you don't borrow, you don't spend more than your income. And then you should ensure that your income does not surpass your productivity. And also you ensure that you have productivity. You do whatever you can to ensure that you have enough productivity, because that's what matters. So as an economy, Kenya went into, as an emerging or a frontier economy. There is a time when the government or the economy was doing so well, and the regime by then went into borrowing. And today is now the time when we're coming into the terms of the borrowing, and now we have to raise funds to pay the debts we are in. But looking at the efforts government is doing, they're trying as much as possible to pay through fiscal consolidation. They're raising funds through taxes. They're trying to raise a lot of, they're trying to ensure that, the corporates are also trying to produce as much as possible in order to have more in terms of exports and boost our current account so that you can have more exports than imports. So what government is trying to do right now is try to address our debt issues. They're trying to go into more concessionary loans. You see the agreement that you got into with IMF. They're also trying to do what is called austerity measures. Austerity is when you say, now I don't want to spend more, I want to raise more and save more. So they're trying to look for ways in which they can raise more taxes without, again, affecting the vulnerable in society. So it's a delicate balancing act through trying to raise revenue through taxation and also trying to protect the most vulnerable in society, considering that not Kenya alone is going through this crisis, it's world over. Even the US raised their debt ceiling the other day. So it's something that is that happens in cycles, both on an individual level and also on a government level. That there is a time when you feel very confident. You have what you call the animal instincts. You feel very confident with your spending, so you tend to spend more than your income. And when that happens, you get into borrowing, you get into debt. So when you're in debt now, you're very confident, you spend more, and therefore, when you borrow, remember, you don't borrow from someone else, you're borrowing from your future self. So when that future comes, you're going now to start paying, that is when the pain comes. So it's a cycle world over. These cycles are informed by short-term, it's a short-term debt cycle that informs a long-term debt cycle. So when most people are happy, they're borrowing, they're spending a lot, it's a boom. But now when the future comes and time for paying comes, that's when now you see the cycle is going down, people get depressed, and also now the economic goes into a crash or the bottom.
True.
Yeah.
Does cutting down on the government expenditure ease the situation?
Absolutely. There are three ways in which governments tend to deleverage. It's called deleveraging. Because now when you've leveraged or you've over-leveraged, then there comes a time you need to deleverage. That is the time of a crisis. Those are the times of a downturn. So what happens during downturns is that governments can decide to deleverage in different ways. One, we have, inflationary ways, and there are ways which are not inflationary, which are deflationary ways of deleveraging or solving the debt crisis. So the first one is printing money. We've seen, for example, the US government has increased their debt ceiling, and for them, they can easily print money through a process called quantitative easing. They print money, and then they give this money to their central bank, and then the central bank can be able now to sell it through government bonds to the individuals. Now people can be able to buy, get the money through buying what you call government bonds. Locally, we don't really do that a lot because of the obvious reasons of inflation. But again, inflation, printing money is not a bad thing if it's meant to offset falling credit. If you want to boost credit, then you can easily print money so that you can support credit from falling. But again, when you look at economies, especially the sub-Saharan economy, it can have a very dire ramification. So most governments tend to look for the deflationary measures of trying to address the crisis by one, austerity, like you said it, trying to cut costs, trying to cut expenses. Government has done it. We've seen government doesn't have the appetite the previous regime had in infrastructure project, the mega infrastructure projects, so they've taken it slow. Number two, you can look into wealth redistribution. Wealth redistribution does not necessarily mean that you take from the haves and you give the have-nots directly, but you can do it through taxation. Government has shown an effort in trying to tax the rich, the people
Which
who
is
have
not
a lot.
well taken.
Yeah, so that now they can be able to give more incentive towards the poor in society. It's a form of trying to balance or to redistribute wealth. And the last one, of course, is through non-performance and debt restructuring. That is when governments, for example, the Kenyan government previously, they said, like, we can't pay, we won't pay, these debts are extreme to us. Let's either restructure or we can default. So those are the three ways of trying to address the debt crisis or deleverage through deflationary measures. The other one is printing money, which is inflationary. But again, if it's done well, it can be able to deleverage smoothly.
You indicated earlier that the US government has done it, but we can't do it locally. So I'm wondering, why is it that we are unable to print the money?
Now, again, the US government has a very superior currency. They have the privilege of having the world currency reserve. The dollar is currently the world currency reserve. So they can be able to print as much as possible through quantitative easing, and then use it, introduce it into the global market through bonds. So them, they have that advantage, and they've done that for the longest time possible. The U.S. government has never defaulted on its debt.
True.
But again, the advantage they have is that majority of their debt is being held by the locals. 75% of the U.S. debt is held by Americans, as opposed to us, whereby majority of our debt is foreign held. So those are the advantages they have. The dollar, being a fiat currency, is not backed by any commodity such as gold, but therefore it gives them leeway. They can print as much as possible because they don't need to back it with any commodity like gold or oil or silver. So they have that leverage. They can be able to print and introduce the money into the world economy through bonds.
Okay, so what can our government do to stimulate economic growth at this point?
There are many ways in which government can be able to boost the economic growth. Remember, a growth of any economy is premised on the principle of aggregate demand. What I mean by aggregate demand is you look at government spending, you look at corporate spending, you look at consumer spending, and then you add net foreign trade. That is exports, you subtract imports. So previously, our GDP has been growing thanks to government spending. A lot of it is a result of government spending, and then now government says the economy is growing, but Mwananchi is not feeling it. So that is the reason why we've seen our numbers growing, but again, citizens are not feeling the economic growth. So government is trying to address this by ensuring that we boost consumer spending, ensure as much as possible people get into productive employment. So government should focus more on creating more, better employment for the young men and women. They should also focus on, foreign investment. They ensure that they encourage manufacturing and industrialization, because only industries are able to employ in the capital-intensive industries. Look at the value you can get from the cotton value chain. How many people can be employed in that? And also encourage people to, especially those farmers, ensure that the price of farm inputs is reduced so that you can be able to boost our agriculture and exports we're making from agriculture.
Okay.
Yes.
We all know that one of the ways of government raising revenue is through taxation, and we currently have a finance bill that has brought a lot of uproar. What are your thoughts on the taxes being imposed, the new taxes that were not there, like the people who trade in cryptocurrency, bitcoins, the content creators, and a few other new taxes, like from the chamas and everything? What are your thoughts on that?
Now, tax is a good concept to raise revenues. Of course, one of the ways in which government is allowed to raise revenue is through taxation, and the second one is through borrowing. But there's a concept in economics called the Laffer curve. So when you increase taxes, let's say by 1%, you end up reducing your GDP by 2 or 3%. So increase of taxes or sharp increase of taxes might end up having unintended consequences. So sometimes, for example, you've increased a lot of taxes to the corporates, you end up having corporates laying off staff, and therefore you end up with a larger part of the population unemployed and losing their livelihoods. So government should approach that one, you should approach taxes carefully. They should do a lot of consultation with the public through public participation so that people can be able to own these taxes. They need to do a lot of sensitization so that people can be able to know that paying taxes is one way of being independent and avoiding the foreign debt that you are in. Generally, Kenya has been a victim for the longest time of the burden. Kenya as a government has suffered the burden of the informal sector, whereby we have the little minority who are employed in the formal sector paying up to 30% in terms of their income. Corporates in Kenya paying the highest in the region, 30% income tax, corporate tax, whereas the large majority who are in the informal sector are hardly paying their fair share. So that one again gives the point it underscores is that when you look at it in terms of GDP contribution, we have 75% of our GDP being raised from the informal sector. More than 80% of jobs in Kenya are thanks to the informal sector. But this is the same sector that doesn't contribute their fair share in terms of income tax. So if government can be able to create structures in order to tap into this opportunity, and tap into the revenues that you can get from the informal sector, then we can be able to have a lot in terms of our revenues. I've always joked around that actually the biggest challenge we have is not a debt crisis, we have a revenue crisis.
Very true.
Yeah.
Speaking of the informal sector, we've seen that the turnover tax has been increased to 3%,
Yeah.
which I feel is mostly targeting the informal sector. What are your thoughts on that?
Absolutely. Actually, that is what I was alluding to. Like, government is trying as much as possible to tap into the informal sector by telling them, yeah, look, yes, you are the biggest contributor to our economy. Yes, you're the biggest contributor into employment creation in Kenya, but you need to pay your fair share. So that's why, government is trying to impose or introduced turnover tax. They increased it from 1% to 3% as a way of telling them, yeah, you guys, you can be able to pay your fair share the same way the people in the formal sector are, the same way the corporates are. So they're trying to introduce it, but again, there's likely to be a lot of challenges in trying to, remitting these taxes. There's need to create more clearer structures to put people into maybe groups or circles, just as a way of ensuring that they track these revenues that are going to come from this sector.
Yeah, because I actually think it will be hard to track.
Yeah,
Because
tracking.
if someone runs an enterprise
Yeah,
and they pay their employees in cash and they don't have the ETR machines or wherever, so it will be quite a task.
yeah, government has a challenge. They need to come up with clear and more visible structures. I can suggest they create circles. They can say everybody who's getting into business, they need to belong to a circle that is in the same trade or the same craft they are. We've done it in the matatu industry. It's worked. Matatu industry is currently organized.
True.
Even if people say it's organized chaos, but it's still organized. You can be able to track. So if we manage to replicate the same into these other sectors, we say if you're selling second-hand spare parts, then you should belong to a circle that of businessmen who are doing the same in the same locality. Then it can be easy now for government to trace it. Even for government, when they want to pay, maybe to give out social safety nets, maybe there is a crisis such as COVID, government needs to protect maybe the mamambogas. Now they can be able to use the same channels to be able to pay these people or to give even the loan, such as the Hustler loan. Hustler fund can easily go through these people and reach the last beneficiary if government created structures in the informal sector. So it's a win-win. Government, on one hand, can be able to raise more revenue from the informal sector. At the same time, the informal sector can be able to get subsidies from government. They can be able to get safety nets. They can be able to receive more from government through maybe loans or other benefits from government through the same structures.
Okay.
Yeah.
Speaking of circles, what are some of the investment opportunities we have in the country?
Now, thank you, Locadia, for that question. Whenever you have a crisis in an economy, it gives the locals an opportunity. Whenever you see a crisis, there is an opportunity. So circles in Kenya, the circle movement in Kenya, I think is the case study to be used in the world as the most successful movement we have around SACCOs, what they call credit unions, or microfinance movement. Mostly what is happening is that Kenyans have been able to organize themselves along small savings and loans, and they've been able to sustain themselves by giving out loans to themselves and also giving out other more advanced credit facility to the same. There are a lot of opportunities in Kenya locally whereby individuals and also even companies can be able to take advantage of in the SACCO movement, number one. Number two, there are also other opportunities that you can be able to, individuals can be able to get in the money markets. For example, investing in money market funds, investing in fixed income funds, investing in equity funds, and other unit trust products we have in the market. We have players in the market. The beauty with these products is that they are all regulated. SACCOs are regulated by SASRA. Money market funds and other unit trust products are regulated by the Capital Markets Authority. So you can easily reach out to a fund manager and say, I want to invest in a money market fund and benefit from the power of compounding most unit trust products offer. You benefit from the economies of scale by investing in a pooled investment, and also benefit from these corporate trustee custodial services, and these are other services that you're going to gain when you invest in money market funds and other unit trust products. Most importantly, all these funds are regulated by the regulator, so it's an extra, feeling of safety when you invest in these products, as opposed to investing in a fund that is not regulated. Also, we've seen with this crisis or with this economic crisis, which is world over, we've seen there are a lot of opportunities in the stock market. Currently, the Nairobi All Share Index, the NASI index, is trading at a discount. Most foreign investors left the market in search for safe havens in their countries. Remember, 80% of the Nairobi Securities Exchange is a result of the trades that come from the foreigners. So we saw mass sell-offs as they had a flight for safety because of the geopolitical tension we saw in Eastern Europe as a result of the whatever is happening in Ukraine. Also, the issue to do with the weakening Kenya shilling exposed foreign investors to a lot of foreign exchange risk, so they left. And also, lastly, the increase of interest rates in the money market products in the US, up to 5% on the dollar, they made it more attractive for them in the US to invest. So they sold their shares looking for these opportunities abroad. So they left our stocks here falling in prices. But again, it gives the local investor a very good investment opportunity or an entry opportunity to buy stocks while the prices are low.
This is off investment kidogo. You spoke about the weakening of the Kenyan shilling.
Yeah.
And I remember that a few months ago, the government decided that they will be buying petroleum products using the Kenyan shilling. I don't know if they've started buying it yet, but what's the impact?
No, they tried to delay, but again, there wasn't impact. There's a saying we usually say that markets are smart, markets are wise. So unless you come up with a very solid decision, such as a policy or something which is more tangible to change the markets, often we usually say that markets are very wise. For example, right now we have an infrastructure bond on the offering. And then the rates are going up, bond yields are up. So we're likely to see returns on bonds going up, largely attributed by the demand for government to raise more funds locally, domestically, so that it can be able to pay some of its recurrent expenditure and also maturing debts. So they're raising funds in order to pay it. Remember, most of our debt was denominated in dollars. So again, it means as the dollar continue strengthening against the shilling, it means that the debt is going to continue expanding. So that is a very delicate position we find ourselves in. But again, our foreign reserves, the dollar will continue strengthening as long as we don't improve our current account, what you call how much are we exporting, how much are we importing. So we should be able to export more than we import so that we improve our foreign exchange earnings, so that we have more dollars in circulation locally, and then increase the demand for the shilling so that the shilling value can go up. But as things are right now, there's still a high demand for the dollar as a result of us being a net importer. So most importers are looking for the dollar. Government is looking for the dollar to pay debt. So there's a high demand for the dollar. So that's why the shilling will continue weakening until we improve our current account.
I think that one of the reasons as to why we import more than we export is our manufacturing sector is kind of struggling. Does the government create a favorable opportunity for people to get into the manufacturing sector? Because unless we strengthen our manufacturing sector, we'll still be importing more than we're exporting.
Yeah, and I agree. That now alludes to the ease of doing business. Is government taxing corporates more? Like I said, the 30% corporate tax is the highest in the region. Maybe government should look into ways of reducing that so that they can encourage or even reduce it for the first 5 years when a manufacturing plant establishes. The cost of energy is still high for our manufacturers. We've seen in the recent past an attempt of our manufacturers trying to switch to solar. Amongst other factors, there's an issue around, taxes. There's an issue around labor, the cost of labor. There is also an issue around the cost of energy. So if government will get it right around those areas, then you can have it easy for, especially when attracting foreign investment.
Okay.
Yeah.
Back to the final part of investments
Yeah.
is the treasury bonds. How effective are they? Is Emakiba still there? Because I remember when Emakiba was being introduced, I was still a newbie in this investment thing, and
Yeah,
I was really
absolutely.
excited and
Yeah,
all.
there are two ways in which government raises funds through the domestic government is by issuing short-term, by selling short-term debt or by selling long-term debt. So when government is selling short-term debt, it's through a T-bill. They do it through a treasury T-bill, a treasury bill, that is a T-bill, or they can be able to do it through a treasury bond. So when government is raising a T-bill, it can either be a 3-month, 6-month, or a 1-year T-bill. When they're raising through a bond, it can be up to a 30-year treasury bond. It can either be a fixed coupon bond or it can be an infrastructure bond, which is tax-free, for example, the one that is currently on auction. So there are many ways in which you can be able to invest as an individual. You can use the USSD *866# so that you can access the opportunity. You can do your bidding, or you can do it through a brokerage or an investment bank by opening a CDS account with an investment bank, and then you can be able to bid through them. But you have to ensure that you have an account with the CBK, a CDS account with the Central Bank of Kenya, and then you go to a placing agent who is mostly an investment bank or a brokerage firm, and then you can be able to bid for a bond. The minimum you can invest in a treasury bond is 100,000. So it's still, government has tried to make it accessible to the locals, but they need to go lower.
True.
Yeah. So for treasury bills, you can as well do it directly by dialing *866#, and then you bid, and then later on you're able to do the transfer.
What is the interest rate, and are there any risks? And would you advise anyone to go that way?
Interest rates are usually subject to the monetary policy. In other words, they're subject to the prevailing market conditions. Bond yields can go up or down depending on the prevailing conditions. When bond prices go up, it means the bond yields are going to go lower. Also, the same with T-bills. So rates are not fixed. They are subject to the prevailing market conditions. And but what they usually do is that often the returns are above the rate of inflation. Currently, the rate of inflation is around 7.9. We've seen all bonds, government bonds, are having a very competitive rate of 14%, 15%,
Yeah.
and you expect it to continue the same. So if the rates are that high in the primary market, then they should be higher in the secondary market. And when you go to the private markets, the rates now should be even more competitive. So the first thing you need to look when you want to invest in a fixed or in a bond or in any instrument that is yielding an interest rate, then you should look at the rate of inflation. Whatever return you should get should be able to outperform the rate of inflation.
Lastly,
Okay.
what investment opportunities are available for Kenyans in the diaspora?
Now, the diaspora market is a good market. They should be looking into government securities. Currently, yields are high. We're talking at a high of 14%, 15% in the secondary market. There are opportunities in the money markets. Like I said, there is that extra shell of protection as a result of regulation in the unit trust products. You can also look into the stock market. I said our stock market is currently on a bear run. We've lost up to 23% from the peak we had in January. So that is an indication. When you lose up to more than 20%, it's an indication that the stock market is in a bear market. So they can take advantage of the prices, which are currently discounted, and buy low because now the market, most of the stocks are trading at a discount. They buy now so that with a long-term investment horizon, so that 2 to 3 years from now, you can be able to say, now I've gained a very good capital appreciation on the stock I bought. I bought it at 15. Now it's trading at 30, at 35. That's more than 100% return. And then I can go home about it. So there are options in the money market. There are options in government securities, bonds and bills. You can as well look for these opportunities in the stock market. And you're available here for advisory.
Okay.
Yeah.
Thank you so much for your time. And now that you're available for advisory, tell us where to find you.
So I'm available on all the social media platforms under the name Michael Obaga. I'm available also on print media, often on the local dailies. I'm a columnist. I'm also available on my phone. I believe Leocadia is going to post it somewhere so that you can be able to reach out, and my email, so that now you can be able to either write or call, so that now you can be able to get this advisory. And we don't charge for these advisories.
It's pro bono.
It's pro bono.
Ah,
Yeah.
nice.